No sound? Was I muted the entire time? I said many, many words. I said many words. I'm sorry, guys. I didn't realize I was muted. Sorry about that, Michael. Sorry about that, both feet. Both feet, did you hear me at all? I did say many, many words. Okay, sorry. I had to blow my nose for a second. That's why I muted right there. But shoot, sorry about that. I said lots of, man, I said lots of words right there. Well, anyways, what I said was, let's see if we sell off again today. Another rise in the overnight session. Yesterday, that led to an extreme sell-off after about 45 minutes of trading. We'll see if the same thing happens today. Good thing yesterday is that there was lower volume on the way down, so that's good. That was a good thing. We'll see what happens today. And then I was just kind of going through some of the names. I guess you saw the chart. So I was looking at some IBD stuff, and their stock of the day is Ubiquity Networks, which is UBNT right here. And look at that, holding very, very strong. I actually like Ubiquity Networks. I use Ubiquity Networks products. I've liked them for a very long time. Looks like a lot of people have as well. So pretty good right there. I did say the best words, Michael. Those were the best words. Unfortunately, they were not recorded. Now all I have is substandard words. Sucks. Definitely sucks. I bought Trump's course on how to say the best words at the best times, the best way. It was okay. All right, let's see what's rocking today. URI up 7%, but still stuck in the dumps. GOOS yesterday closed well into the lows. Not an encouraging chart there for Goose. I'll probably be avoiding that one. MEs, perpetual downtrend. ADX, same thing with ADXS. TTD, which has been a leader, and it looks like it has a nice little cup with handle that it's been working on. Okay, so there you go. Little cup with handle has a buy point right here of 149.72, so 149.82 would be your buy point on TTD. This has been a leading stock. Pretty good fundamentals in this one. What's your medium-term outlook for the markets in general? Let's say come spring. Are we in a bear still? I have some real estate I want to sell this spring. That's difficult to say. Well, like I said yesterday, we're still in a very news-driven environment, which is not healthy. The market, we'd like the market to ignore the news, look at the economy, and be confident. We're not there right now. In the spring, really could be the same. I think it depends on how the trade war is going and because that'll be one, maybe two interest rate hikes from now, depending on when you're going to sell your real estate. So, yeah, I guess we'll know in about halfway there when you're going to sell your real estate, what the market's going to look like. But generally, if we hold up above the 64.41 level on the Nasdaq, then we'll be okay. If we're still above this by then, we probably won't be going lower, or we will have already gone lower by then. So the market will give you the answer, but the 64.41. Whatever this level is, this low right here, 64.49.50 is what it is actually. But the economy is still robust and doing well, so it doesn't lead us into a deeper bear market, or at least it shouldn't unless there's some other large macroeconomic event that occurs. So I think we're doing okay. We've had a 16-ish% sell-off in the indexes. That usually ends a correction, but we could go into a deeper bear. It has been 10 years since a bear market. That is extremely abnormal. And usually a bear market occurs every 2 to 3 years. It's been 10 years since we had a bear market. So we're definitely due a much deeper correction. At the same time, it doesn't have to happen. What's that in Dow terms? You're going to make me look at the Dow? No. Well, first of all, the Dow Jones does not lead the markets. The Nasdaq really does. You really should learn to look at the Nasdaq. Well, see, the Nasdaq and the Dow and the S&P actually undercut the other day. This was their low right there at about 242, 224. They undercut here to 23.8. So, the Dow is 30 very large stocks. The Nasdaq is comprised of the top growth stocks. So therefore, the Nasdaq leads us higher and lower typically, and has more gains and more losses during the uptrends and the downtrends. The Dow Jones typically will lag. If you look at the indexes, mostly during 2017, the Dow Jones and the Russell 2000 led us higher and lower. The Dow Jones and the S&P were lagging. So they're technically a lagging indicator. The news likes the Dow because it's a large number. And, the Dow, it's the biggest index. It's been around the longest, I guess. It's not the biggest index. It's been around the longest. And so it's kind of viewed with more validity, but the Nasdaq really leads us higher and lower. You can still use the Dow, but it's only part of the equation. You really should look at the Dow, the S&P, the Nasdaq, and the Russell to really get a full picture of what's happening, because that's a full view of the U.S. economy. I really never look at the Dow. Honestly, I never look at it. I only hear about it on the news when it's crossing like 25,000. It's just a big round number. S&P, Nasdaq, and no one talks about the Russell too much. But the Russell and so the QQQ is the ETF for the Nasdaq, and then RUT is what I follow for the Russell. And I actually haven't looked at the Russell for a long time. Russell not looking so hot. Russell definitely not looking so hot. The S&P is important as well. Obviously, it is very important, but it does tend to lag a little more than the Nasdaq and the Russell. The Nasdaq and the Russell's a small cap index. I don't know all the criteria they use for what is on the Russell. Let me see, Russell 2000 index criteria. Yeah, I'm not quite sure the criteria. Trying to look it up real quick. The bottom 2,000 stocks in the Russell 3000 index. I didn't know that. By far the most common benchmark for mutual funds that identify themselves as small cap, while the S&P 500 index is used primarily for large cap. It's the most widely quoted measure of the overall performance of the small cap to mid cap company shares. The index represents approximately 8% of the total market capitalization of the Russell 3000 index. Okay, so what's the Russell 3000 index? Capitalization weighted stock market index maintained by FTSE that seeks a benchmark of the entire U.S. stock market. Okay, so that's good to know. I actually did not know that. That's pretty cool. I've never looked this up before. You hear things from people and then you just go, oh, okay, cool. And you never look into it further than that. So the Russell 3000 index is a capitalization weighted stock market index, and it measures the performance of the 3,000 largest publicly held companies. So the Russell 2000 omits that top 1,000 companies and takes a look at the bottom 2,000 companies. So anyway, Russell looks really bad. I haven't looked at this in a long time. That's purely my fault. But you can see the small caps underperforming. This is the Nasdaq. This is the Russell 2000. Usually, when these diverge, that's not a healthy market situation. This is already looks like it's broken down already and consolidating lower. This doesn't feel that way, or doesn't look that way, but it does kind of feel that way a little bit. I think we all feel that we're lower than we actually are. But usually, when the small caps are selling off, they're taking risk off of the table. And the Nasdaq can be considered higher risk. S&P is considered a broader view of the general U.S. economy. And S&P 500 is the top 500 companies. Let's see what they say about that. S&P is American Stock Market Index based on market capitalization of 500 large companies having common stock listed on NYSE and Nasdaq. So there you go. But yeah, Russell and the Nasdaq will typically lead us up and down. That SPY, which represents the S&P 500, it's basically the benchmark index for a lot of institutions. Is the S&P 500? It basically says, okay, if you're not being the S&P 500, then you're not doing your job right, and most of them don't do their job right. Bye, babe. Bye, Ethan. So, like I said, you can look at the Dow, but the S&P, the Russell, and the Nasdaq, those are the three that I really look at. I usually don't look at the Dow at all. If the Dow is leading, I'm worried. If the Dow is going higher before the rest of the markets, I'm a little bit worried because that usually means that they're propping up those 30 companies while selling off the 500 in the S&P 500 or the many thousands in the Nasdaq. Or hundreds, I guess. 100 to 2, Nasdaq 200, I think it is. Anyway. All right, so what are we doing now? So, just like yesterday, maintaining elevated levels so far. Yesterday this happened. We sold off again. So, we'll see what happens there. But yeah, I'm a little more intrigued by this Russell 2000 story. Let's look at this Russell for a minute. There's got to be a way I can overlay. I would like to overlay the Nasdaq. Hi, James. Good morning. Yeah, absolutely. No problem. Both feet. Revisit INSG. Yeah, let's do that real quick. INSG did not have a good day yesterday. It was looking good in the morning. Unfortunately, the close of the day basically runs the market. It did not have a good close. Did not have a good close. It closed well into that triangle right there on elevated volume. It had good volume in the morning. Let's actually dive down a little deeper on that one. So we had good volume in the morning, and then we did kind of sell off throughout the day. And the volume wasn't that bad. The volume was pretty low, so I'm not super mad at that. There's a high-ish volume candle. And then you have the end of the day here, which had a very elevated volume candle, basically about 66% higher than that candle, and it was a bullish candle. So, yeah, selling off not good, but it did have some good runs here. Good couple candles in the morning, and then looks like that was like a 50-50 candle right there. And then kind of a weak sell-off throughout the day. So a weak sell-off is good, but ideally it doesn't sell off at all. But we're not in ideal market conditions right now. So I still think you're watching and hawking. You're not necessarily buying and trading. Maybe I've not been super clear about that. But, as long as we maintain some of these levels on the NASDAQ, we'll be healthier than worse off. But there's been a lot of, like I said, we have supports at the lows. There's support in the market. It has to maintain support. And there's really deep pockets. They can maintain it for a while. This isn't crypto, but at the same time, that support will wane if larger factors present themselves, such as a longer or more intense trade war or interest rates don't do what they want it to do. Don't do what they want it to do. Because look at the broader economy saying, maybe we're not necessarily as strong as we think. And I kind of agree with that sentiment a little bit. Maybe we're not as robust as we think we are, but it's still a robust economy. We still have very good jobs numbers. Our wages are starting to improve, which is generally good for the economy. When you have consumers. See, in my opinion, I don't want to get super political, but in my opinion, when you look at things from an economic perspective, The people on Wall Street obviously want the money to go to the companies so they can quote unquote grow, but at the same time, a lot of companies just shill that back out in dividends or stock buybacks, which does not help the general economy. When you have actual wages growing, keep in mind that most people in the U.S. have no savings, and so they spend every dollar they get, and that does go into the economy. So the more money you pump into the general economy, which is wage growth, the better off I think the market will be. So I'm encouraged by wage growth personally more than I am tax cuts. I like the wage growth aspect of things. So I think that's good. But we'll see what happens. We'll see what happens. I've been watching a lot of things lately, trying to get some insight on. I saw a thing about tax revenue has been in a downtrend, and that has led to some recessionary indicators. Not quite sure if that's the case now. It could, but all the tax breaks have gone to the companies, which may not necessarily lead to recessionary tendencies, because with wage growth and job growth leading to more spending, the economy may not show that slowdown. So let me see if I don't know if I'm articulating myself properly, and probably not. So like if you've got so what the tax revenue looks like. What's going on here? I got to do that. Okay. So what the tax revenue is looking like lately, it goes up, it goes down, it goes and stuff like that, right? And then that's all I get. And you suck. There you go. So, with the general economy going up and then it peters off, and that's led to some recessions. Basically, when it goes down, it leads to some recessions. Flat is okay. And then lately it's been has a larger rounding top to it, like this. Is what our what our tax books look like, and the tax cuts were like here. And a majority of those tax cuts were corporations, right? So just like I said a minute ago, the corporations don't necessarily lead to economic growth, but the wage growth has actually stagnated, and I think it's gone up a little bit. So I think the wage growth could bump up the economy, right? Could bump up the economy even if tax receipts go down, because it's the corporate tax receipts. I'd like to see a chart with corporate tax receipts versus personal income tax receipts, because I think personal income tax receipts may lead more into stock market viability, since our economy is like 2/3 consumer. Then because the federal government doesn't necessarily lead our spending, and just because tax receipts go down doesn't mean the government spends less, right? So it may not matter. So if you see that out there, ask about what I just said. If you hear someone talking about that, say you can talk about that. So, all right, what's the Nasdaq doing? We got Nasdaq up, maintaining, which is fine. Actually, you know what? I was going to look further at the Russell, and I was going to overlay the Nasdaq. Let's do that. That should be fun stuff. Okay, so let's try to overlay. See if I know how to do this. I haven't done this in a very long time. Quick study, edit studies, studies chart. No. Edit studies, chart settings. Just do a quick Google search. Okay. Studies, add study, compare with. Okay. Studies, add studies, compare with. That makes sense. Comparison? All right, there we go. That was painful. There we go. Okay. So there's your Nasdaq, and there's your, so the Nasdaq is in the lovely pink line. And see, they kind of generally work together. The Nasdaq here has been a little more volatile lately. Maintain more elevated levels. See the if I highlight that pink, see the green underneath all of this Nasdaq action. That shows them taking that small cap risk off of the table. So it's still not a risk on environment, that's for sure. Let's do this. Let's see if this doesn't break my charts. Okay, cool. There we go. So, yeah, Nasdaq right here leading. Let's see if we can do that again. There we go. Comparison. So let's throw the so we'll throw the SPX on here. I'm cool with that. Okay, we got blue. No, I've got blue for my moving averages. Oops. Shoot, you know what I could do? I could remove the moving averages. I could add a comparison for the SPX. I could add a comparison for the Dow. And let's see what we get. If we put the Dow, the S&P, and that over the Russell. Okay, so there's your Nasdaq greatly outperforming over the past 10 years. So Nasdaq, Russell 2000, blue is the S&P 500, and that is the Dow Jones. So I wasn't really trying to get that spread there, but I guess I do when I do it in this fashion. But look at the Nasdaq just booming. That's your Nvidia, that's your Amazon, that's all of those huge ones. But you can see right there, that and the Russell leading the markets higher, and the Dow Jones actually not leading anything. It's at the bottom. It's at the bottom of the pit ever since the ultimate lows down here. So it's had the worst gains. Your S&P's kind of even underperformed small caps, which that's a little odd to me. I didn't think it would necessarily do that. But you can see the reactions here in the Russell 2000 at some points is a little more exaggerated. Like right here, you see the Russell's a little more exaggerated than even the Nasdaq. So these kind of oscillate back and forth as leading the market higher. So here we had the Russell moving higher, and the Nasdaq kept that going a little bit longer, which is probably why this rallied hard. It also looks like this sold off deeper than this sold off here. So you can generally see the strength in the Nasdaq, which is why I really use the Nasdaq as my leading index. Oh, what program that I'm operating here? This is Think or Swim. You get this through TD Ameritrade. It's a free software. It's probably one of the best free platforms out there, and it's been for a long time. But yeah, you can see the Nasdaq just owning it. Look, it looks like this chart's down percentages. So we're up 459 in the Nasdaq, and all these are down 200. So, that's why I like the Nasdaq, the Qs, the TQQQ. That's why I like those over the SPY. A lot of times in your 401ks at work, you don't get the option for the Nasdaq. You only get the option for the S&P 500 index fund, which I think is horrible. I think they should give you different index options, but that's just me. But look at that look at the growth of the Nasdaq. Let's do this in the past 2 years. I think it'll still be quite abrupt. Okay, so there you go. So we've got, is that the Russell? Wow, look at that. The Russell's taking it on the chin. That's horrible. I didn't realize it was that. That's interesting. So Russell's only up 6% in 2 years at this point. Nasdaq still up 40%. You got actually is that the Dow? That's the Dow Jones right there, ladies and gentlemen, outperforming up 24%, and then 18% for the S&P. So very interesting in the past 2 years. Nasdaq still leading, but you have a small cap risk being greatly removed right here. And even so, look at the Dow. You know why? Because I think Apple was added to the Dow. I think that's why. I don't think Amazon's in the Dow. Dow components. Yeah, Apple was added to the Dow, though. I think that's why. Yep, Apple's added to the Dow in 2015. So even prior to this, Dow was added prior to this. Boeing, Caterpillar, Chevron, Cisco, Coke, Dow. Here, I'll bring the list up here. That's I didn't realize that. That's very interesting. Caterpillar, Cisco Systems, Intel, no Google. United Healthcare, Verizon, Walmart, Walt Disney. This is listed in alphabetical order, obviously. You can see Apple's on the Nasdaq, Cisco's on the Nasdaq, Intel's on the Nasdaq. Most everything's on the NYSE, but Apple, Cisco, Intel, Microsoft, and Walgreens Boots Alliance, which is Walgreens. The only ones on the Nasdaq. Everything else is on the NYSE. That's very interesting. Very interesting. Notes. No notes on any of these, huh? Only a couple of these. So anyway, there's the Dow Jones surprising with a second place finish. That's a little unknown, unbeknownst to me. So I'm pretty sure that's the Dow Jones. We got the Nasdaq. The blue is the S&P. Yeah, so that's the Dow Jones. Wow. I'm shocked right there. That's actually shocking to me. I would have guessed the Russell would have maintained second place, but wow, shows what I know. That's pretty interesting. Let's go back 5 years. And Dow Jones started outperforming in 2014. Oh no, not 2014. They started outperforming the S&P in 2017 here. Kind of an interesting flip. And then, wow, even going back 2 years, the Russell's greatly underperforming. Huh. But you can see here, the Russell had a great 2018. Opened here, closed here. The Dow opened here and is I don't know, I guess this is lower too. Anyway, you guys can look at that again if you want to later, but still the Nasdaq is the leading index. All right, let's get back to the general markets. And we'll get rid of all of these.
Dad,
Yes, James.
we don't have presents yet.
You don't have presents yet?
Yeah.
You didn't get me a present yet?
No,
You need to get me a present immediately.
no. There's no present.
That's true. All right, so Nasdaq doing good here, holding at 1.42%. Not bad. All right, so Nasdaq holding good. Let's see what we got working here today, ladies and gentlemen. I just opened Internet Explorer for no apparent reason. All right, so ME's URI. BLFS coming back up today after a pretty big romp. BLFS was kind of destroyed. It was looking good, and then it stopped looking good. And now it looks like a maybe potential bottoming pattern right here. A high volume down day after earnings, and it hasn't come back. Now has formed a little base, kind of like a mini cup, only a few days old. 1, 2, 3, 4, 5, 6, 7 days old. Maybe a little rally over this most recent high of 12 and change, 1272, something like that. could get us going. That would put us back above the 200-day moving average. And looks like the 50 and the 200 just crossed here to the in the death cross. Dun dun dun. And the market death crossed over here too. Dun dun dun. SQ's up 5% today. Sen's up 5%. I should say this morning, because it's not today. This is not the day. This is this morning. SQ. If this trend line were to break out, I'd be a little bullish on the name. Hold on. All right, my son wants me to print him off a Christmas picture. Hold on a second. You may see some stuff pop on your screen like that. Thanks for the question, Justin. I have a picture printing, so if you hear a mechanical noise, that's going to be that. Yeah, I think for longer-term investors, for sure, absolutely. We're down a tremendous amount in the Nasdaq. We're still down about 11%, about 11.5%. We were down as much as 16.5%. I think for longer-term investments, retirement accounts, index funds, and things like that you plan on being in for a while, absolutely, I think it's a good time. Yeah, whether you want to make your buys, weekly, bi-weekly, whatever you want to do. If you want to set in levels with limit orders, something like that. But again, I don't know how much deeper we're going to go. We can go much deeper. Don't get it twisted. Here's our 20% target here at about 150 on the Qs, which I'm not sure what that relates to in the Nasdaq natively, but in the Qs right down there to about 150 would be our 20%. So let's take worst case scenario. The trade war goes on. They continue to raise interest rates. The economy starts to get stifled a little bit. We could be in for a fairly deep bear market, in a worst case scenario where we head down 20, maybe 30%. We haven't seen too many. Let's look it up real quick. Let's look it up. Biggest bear markets in history.
Dad,
Yes, James.
look at my name.
Okay, so let's look at some of the biggest bear markets in history. 31%, 72%. We have to remove those big swings. We're not doing that. I'm sorry. Here's the percent. 86%. Yeah, definitely avoiding that. See, 28%. 36% would be pretty deep. So rapid fire growth ended with a mild recession accompanied by relatively high inflation of about 6%. The bear market began just as Richard Nixon was elected president after a tumultuous year of assassinations and riots. The weak economy added to tense national atmosphere dominated by growing U.S. involvement in Vietnam. So we have some of these underpinnings. We have some rapid fire growth right now. We may roll into a mild recession. That could be possible. Relatively high inflation of about 6% annually. We're not in that boat. I don't think we're forecasted to be in that. I think this is probably what would cause a 36% drop in the market. Really high inflation, and the Fed is trying to. That's what the Fed's trying to avoid. You don't want 6% inflation. So I don't think we're going to be in the 36% range. 27% range. Decade of sustained inflation. Federal Reserve raised interest rates to nearly 20%, pushing the economy into recession. Combination of high inflation and slow growth known as stagflation. So we definitely don't have stagflation coming up. We don't have slow growth, and we don't have high inflation. Prolonged bull run, computerized program trading strategy swapped the market and contributed to Black Monday. Investors were also nervous after a heated debate between the U.S. and Germany over currency valuation, sparking fears of devaluation of the dollar. As a result, the Dow fell 22%, the worst day since the Panic of 1914. While the days after the crash were frightening, by December the market had bottomed out. So we haven't been crashing. I don't know. This seems really weird. Like why, if that's the reason it dropped 33%. But again, after a prolonged bull run, and see, I think they're grasping at straws here. Program trading strategy swamped the market and contributed to the Black Monday crash of October 19th. So it could have just been a major reaction of Black Monday here on October 19th. And most of the bad things happen in October. I don't know why, but most of the bad things happen in October. We didn't have that bad of a day. We did have a couple of bad days, but so here we do have this kind of a similar situation. We have a heated debate between U.S. and China over trade valuations, over trading. So we don't have the same thing of devaluation, but I would almost argue a trade war with China is probably worse than currency devaluation versus Germany. So, like I said, 20 to 30% could be in the cards. Duration 3 months. These bear markets sometimes don't last very long. This one only lasted 3 months. We've already done 3 months. At least I think. No, we haven't done 3 months yet. We've done what? This is 2 months. We're about 2 months in. 2007 and 2009, we know about the financial crisis. Is that it? Is that 11? 1, 2, 3, 4, 5, 6. 6. That is not 11. I do know how to count. How do I get to 11? How do I get to 11? So if you look at those, there's a few underpinnings, but people have been calling a bear market since 2015, and here we are in 2018 in a correction, not quite in a bear market, but we do have some of the general undertones of some of these, such as we've seen a couple of these come after very very large growth, which is what we're basically in right now, is the tailwind of very high growth, and peak growth, I think, is one of the things that could be worrying the markets. And I don't have more items. I don't have 11. I need 11. Darn it. This is a good little synopsis, too. I like this. I may have to steal this and put it on my website. 1, 2, 3, 4, 5, 6, 7. More items. There we go. 1, 2, 3, 4, 5, 6. Still 6. You're killing me. No pagination. No pages. So anyway, there's that. We do have, like I said, rising interest rates, and China is our two things right now. We just have to see how those go. Nasdaq holding strong today, 1.78% so far. Half an hour into the trading day, 45 minutes into the trading day. So far so good. Yesterday wasn't horrible. I will say that it wasn't horrible. It was lower volume. We just kind of filled the gap that we had there. So today can do anything. Today can really do anything. It can go lower and fill all this range without much fanfare. Going a little higher here, I think, is okay. I don't mind that at all. I think it's pretty good. Square up 5%. So let's look at some Square here. All right, so Square potentially, shoot. What? Is that what I did? That's not what my brain was trying to do. That's what my brain was trying to do. Twitter getting a bump. All right, let's look at some Twitter. All right, Twitter up. Oh, yeah, 5%. Oh, there we go. It's breaking out, guys. Twitter is breaking out. Twitter had a good day yesterday. Look at that. Even closed higher than all this muck, so that's good. What's the volume like? 6 million out of a 24 million day. We're 45 minutes into the trading session. So that, okay, so that hurts my brain. So we have, shoot, 6.4. So 24, 582,889 divided by 13 is 1.8 million volume per half hour session. Did I do that right? That doesn't seem right. 2, 4 divided by 13. Yeah. So, yeah, we're already at elevated volume levels. So we're let's just say, yeah, we're definitely double average volume right now um, in terms of averaging throughout the day. Volume should decrease a little bit though, but I do like the fact that Twitter is getting over this. We've looked at Twitter a lot over the well, not a lot, but over the past couple of weeks, and really liking this tight action that has been forming an inverted head and shoulders. I have a target on here of about 46, so that could get rocking. That would put you. That's like a good 20 something percent higher from here. Yeah, about 25% and change higher from here. So go Twitter. Go Twitter. That would be good. Twitter's also maintained. You can see there's the 200-day moving average right there, and it's basically cradled, found support at the 200-day moving average, and I do like it running right here. I like it a lot. I don't have Twitter highlighted. Netties. All right. Yeah, there we go on Netties. Shoot, I don't have a Netties trade lined up. I kind of want to, though. This is something that I really enjoy this trade setup, to be honest with you guys. I really haven't done as much homework on this as I should have. Actually should have been in yesterday, but the volume yesterday was a little bit lackluster. These winners of old that come back, Netties was a big winner back in the day. It may not even. Oh, there you go. So you see right there, Netties has been on a perpetual uptrend for going from 40 now at 249. It's been in a huge uptrend, and having a big pullback such as this could reset the chart. Definitely resets the base count, and in time could lead to much higher prices in Netties. So I like Netties up here. I like Twitter up here. What else? What else is up here? We talked about Square a little bit, getting over the trend line. We talked about TTD earlier when I was talking silently to myself. So TTD with a cup with handle right here. Not resetting any base count though. Netties. I'm going to go back to Netties real quick. I'm going to go to Netties and potentially set up a trade, see what's what. So we have this, okay, crossing the 50-day, which is a key moving average. Unfortunately, it's still very early in the day. We still could obviously sell off, but Netties so far, look at all the volume has been declining generally with more green pops than red, so that is healthy. And we're a little more elevated than I'd like, but I like the fact that it's maintaining these elevated levels. So I guess the question is, how high can Netties go? That seems like a very aggressive trend line to try to draw. That's what we have at the moment, though. I'm trying to look for some time series analysis here and what could be good here. Okay. Yeah, I already taken a lot of premium out of Netties already. That sucks. I'll have to circle back around to that. CSX, what are you doing, CSX? Bouncing off the 200-day again, still kind of low. EEFT. I was really liking EEFT, formed a nice little cup here. Was trying to break out and then subsequently failed, unfortunately. But it looks like we're coming back. We filled that gap and we're still kind of maintaining elevated levels. EEFT could maintain as well. VMware up about 1% today. Maintaining above the buy point. There's your buy point right there. Good breakout volume. Eli Lilly up 0.55% today. Still trying to go higher. Nothing major. Tesla up 0.5% today. What's Tesla doing? Good stuff. Good tight action. INS and INSG. Oh. All right, guys. I'm gonna get out of here. It looks like the market's maintaining, which is good. We'll see what we do throughout the day. But I'm gonna get out of here. I got to get ready for the real crypto power hour, and James needs some attention as well right now. So I'm gonna get out of here, guys. Stay safe out there. If you're gonna take some positions, I would do some entry positions. I mentioned earlier not trading, but I don't know, maybe wait till the end of the day before taking some positions. And if you do, please make them small. We can reverse at any moment, but so far we seem to have stabilized a little bit. I know it's only been a few days, but I think I don't know. I hope that a lot of this is over with. To be honest with you, if it's not, then it is what it is. But so all right, guys. See you guys tomorrow. Have a good one.